Right now, your firm has work sitting on the books that will never be invoiced. Not because of a billing error, because it was quietly written off before it ever reached the invoice. In professional services, work in progress or WIP is the value of the time that your team is logged but has not been billed yet to the client. It sits on your balance sheet as an asset. In theory, it represents future revenue. In practice, though, a significant proportion of this will never get invoiced. This is things like hours logged against scope that was never contracted, time absorbed on difficult clients that the project manager decided not to fight over, senior time that got pulled in late to rescue a delivery and never appeared on the bill. None of it shows up on the P&L as a loss, at least not in the short term. It just quietly disappears at the end of the project, or worse, at the end of the year when WIP gets written down. The revenue was never recognized, so the write-off barely registers. But it does represent real work that people did, real cost that your firm absorbed. And in many firms, nobody's tracking it systematically until somebody decides to clean up the balance sheet. Your WIP balance is not just an accounting line, it's a window into how much revenue your firm is generating but potentially failing to capture. And in a professional services business, that gap is almost always larger than the owner expects. WIP surfaces in every profit and capacity diagnostic we run. When we go through your billing records in the first 2 weeks, it's one of the clearest signals of revenue that was generated but was never captured. If you want to understand how much of that applies to your firm, the starting point is a 20-minute assessment. There's a link in the description.